CICA, the Captive Insurance Companies Association, takes great pleasure in recognizing and memorializing Fred Reiss, the founding father of the captive insurance industry. Fred Reiss's unyielding belief that risk can be intelligently retained and managed ignited an industry that today, over 50 years later, represents over 5,000 captive insurance companies domiciled in 25 countries, generating over $50 billion in premiums every year. Born in 1925 in Cleveland, Ohio, Fred Reiss was the second child of a former World War I artillery officer and insurance man. Fred moved frequently with his family and quickly adapted to each new location. Following in his father's military footsteps, Fred enlisted in the Navy just 2 months after his 18th birthday. The Navy soon transferred him to Harvard University and enrolled him in the ROTC program, where he graduated in less than 3 years. Fred ended his naval career as a commissioned officer with several war medals. Fred then spent 10 years with the Ohio Inspection Bureau. It was at the Bureau that Fred began to appreciate the value of loss engineering and risk management, an appreciation that would later play an important role in the success or failure of the captive insurance companies Fred would create. In 1953, Fred accepted an offer from one of Youngstown, Ohio's largest insurance agencies, Bruce & Company. While there, Fred devised an innovative strategy to acquire the fire insurance coverage for Youngstown Sheet and Tube, a steel company that employed over 26,000 people and was one of the largest steel companies in the United States. His plan was simple. His client would assume a portion of the risk in exchange for lower premiums. Leveraging his extensive knowledge of fire insurance rate-making and loss prevention principles, Fred could forecast the expected losses and thus the potential underwriting profit. At that time, U.S. carriers issued only first dollar policies. No deductible options were available. Fred needed something better. Undaunted, Fred went to England to speak with Lloyd's of London, where the Lloyd's syndicates reinsured most of the property policies issued in the United States. Fred was successful in convincing the underwriters at Lloyd's to allow Youngstown Sheet and Tube to assume a significant portion of its losses and to manage that risk in exchange for discounting its insurance premiums. Lloyd's, however, was only the reinsurer and was unable to directly insure Youngstown Sheet and Tube. Fred's answer was to use Mahoning Insurance Company, an insurance subsidiary created and owned by Youngstown Sheet and Tube, to issue the fire insurance policy using the reinsurance from Lloyd's of London. Fred soon applied his strategy to many other clients, leading to the creation of American Risk Management in 1958. ARM, as it was commonly referred to, was devoted solely to creating and managing insurance subsidiaries that provided risk management and loss control services. Within a few years, Fred landed 5 additional clients, with each insurance subsidiary being regulated in either Ohio or Kentucky. Since steel companies often owned their own coal mines and referred to these mining operations as, quote, mining captives, unquote, Fred adopted the same terminology and began to refer to these insurance subsidiaries as, quote, insurance captives, unquote, hence the origin of the term captive insurance company. Following the passage of U.S. tax legislation in 1962, Fred's attention turned to the international stage. After an exhaustive search for the right tax, banking, and regulatory environment, Fred moved to Bermuda and launched international risk management known as IRM. Later, he formed Hopewell International Limited, a property risk pooling facility owned by IRM's clients and often referred to as the captive of captives. The success of Hopewell led to the creation of similar pooling facilities for clients of IRM, including companies in Cayman and Ireland. By 1981, the recognition of captives was universally accepted as a legitimate risk financing tool. Brokers and insurance companies who initially spurned the use of captives became purveyors of captives and helped expand the utilization of captives worldwide. Eventually, the Reiss organization had 300 employees. By 1988, Fred's health was in decline. 30 years after the birth of the captive concept, the Reiss organization was sold to Swiss Re. At that time, it was considered the largest privately owned captive management company in the world. Just 5 years later, in 1993, Fred Reiss, the father of the captive movement, passed away in his Bermuda home. At the age of 37, a young Fred Reiss had a vision and the energy to change the world of insurance. His vision and relentless drive helped create an entirely new industry that today represents over 5,000 captive insurance companies, employs thousands of people, creates tens of billions in premiums and assets, and contributes significantly to the economies of many states and countries. In 1998, the Bermuda Insurance Institute honored Fred with its first ever Lifetime Achievement Award. In 2007, Fred was again honored by being inducted into the International Insurance Society's Hall of Fame, whose 100 members include the likes of Benjamin Franklin. Fred Reiss's contributions are still being felt around the world. No longer the sole domain of large companies, captive insurance companies are used today by large and small organizations, groups, associations, and municipalities. Fred Reiss, the father of the captive movement, possessed an unyielding spirit. He succeeded where others had failed, and his legacy survives in the captive insurance industry today. The Captive Insurance Companies Association is proud to recognize the pioneering work of Fred Reiss, the father of the captive insurance industry.